Component of financial statements: balance sheet portray value of economic resources controlled by enterprises. Statement of profit and loss present the result of operation of the enterprises. Cash flow statement shows the way an enterprise generates cash and uses it. Notes and other statements and other explanatory materials present supplementary information explaining different items. User of financial statements: investors. Investors, employees, suppliers, creditors, customers, government, lenders, public. Investor. Analysis of performance, profitability, financial position of the company. Employees. Knowledge of stability, continuity, growth. Suppliers, creditors. Determination of credit worthiness. Customers. Analysis of stability, profitability. Government. Evaluation of entity performance and contribution to social objective. Lenders. Determine whether their loans and interest attaching to them will be paid when due. Public. Determine contribution to local economy and public at large. Fundamental accounting assumptions. Accrual, going concern, consistency. Transactions are recognized as they accrual. Transactions are recognized as and when they occurs, without considering receipt and payment of cash. Going concern. Enterprises will continue in operation in foreseeable future and will not liquidate. Consistency. Using same accounting policies for similar transactions in all accounting period. Qualitative characteristics of financial statements: understandability, relevance, reliability, comparability. Understandability. Information present in financial statements should be readily understandable by users with reasonable knowledge of business and economic activities. Financial statements should contain relevant information only. Relevance. Financial statements should contain relevant information only. Information which is likely to influence economic decision of the user is called relevant. Reliability. Information must be reliable, that is to say, they must be free from material error and bias. Comparability. Financial statements should provide both inter-firm and intra-firm comparison. Element of financial statements: assets, liability, equity, income gain, expenses, losses. Resources controlled by enterprises as a result of past events from which future economic benefit are expected to the enterprises. Assets. Resources controlled by enterprises as a result of past events from which future economic benefit are expected to flow to enterprises. Liability. Present obligation of enterprises arising from past event, the settlement of which is expected to result in an outflow of resource embody, embodying economic benefits. Equity. Residual interest in the assets of enterprises after deducting all its liabilities. Income/gain. Increase in economic benefits during the accounting period in the form of inflow or enhancement of assets or decrease in liability that result in increase in equity other than those relating to contribution from equity participants. Expenses/losses. Decrease in economic benefit during the accounting period in the form of outflow or depletion of assets or in incurrence of liability that result in decrease in equity other than those relating to distribution to equity participants. Measurement of elements in financial statement. Historical cost, that is acquisition price. Current cost. Assets are carried out at the amount of cash or cash equivalent that would have to be paid if the same or equivalent assets is acquired currently. Liabilities are carried at undiscounted amount of cash or cash equivalent that would be required to settle the obligation currently. Realizable or settlement for assets amount currently realizable on sale of the assets in orderly disposal for liabilities. This is discontinued amount expected to be paid on settlement of liability in the normal course of business. Present value. Assets as carried out present value of the future net cash flow generated by the concerned assets. The normal course of business. Liabilities are carried at present value of future net cash flow that are expected to be required to settle the liability in the normal course of business. Financial capital maintenance. At historical cost, opening and closing assets are stated at historical cost. At current purchasing power, restatement of at closing price using average price indices. Physical capital maintenance, restatement at closing price using specific price index.